Welcome to a sponsored webinar by Practice Ignition hosted by CPA Australia, your guide to implementing fixed fee in your accounting firm. My name is Melissa and I will be hosting this webinar and available for any troubleshooting questions you might have with your WebEx setup. We have people joining us from all over the country for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. And now I would like to introduce you to today's chair, Ketty Waller, who will facilitate this session. Ketty, over to you.
Thanks, Melissa. Hi everyone, as Melissa said, my name is Ketty Waller and I'm Head of Public Practice here at CPA Australia. It's my pleasure today to welcome you to our webinar with our presenters Rebecca Mahalik and Ethan Cooney. Rebecca Mahalik was a founding partner of Aptus Accounting and Advisory, a cloud-based accounting firm in Sydney, which focused on leveraging technology to support client growth and help solve their problems. Aptus Accounting and Advisory won the Innovator of the Year at the 2018 Australian Accounting Awards for their focus on tech advisory and efficient business services. In 2019, Aptus joined the Business Depot team, which has expanded the firm's service offerings to their clients. Rebecca leads the Business Depot team based in Sydney, as well as heading up the tech advisory offerings of the Business Depot nationally. Ethan Cooney manages strategic partnerships for practitioners throughout the APAC region. He brings a broad experience of helping accounting firms leverage technology to run more efficiently, be more profitable, and deliver a brilliant client experience. Prior to Practice Ignition, Ethan was a partner success specialist and oversaw partnerships at Fathom. Today we'll be taking questions through our Q&A box. Please direct all questions to all panelists. We will address the questions at the conclusion and we'll do our best for time remaining. As Melissa said, for any troubleshooting queries, please send a message to her through the chat box. It's now time for our session to commence, so now I'd like to hand it to Ethan. Over to you, Ethan.
Thanks so much, Ketty, and welcome to all of you who have tuned in. It's fantastic to be able to join you, albeit virtually today. I am missing being able to catch up with a lot of you, some familiar names in the attendees today at the various networking events that we used to go to. So really excited to be presenting this content to you today, and fantastic to meet you if we haven't been able to connect with you digitally before. Rebecca and I have run a couple of sessions with CPA in the past, and you may have also seen a session in the recent public practice conference from Guy Pearson, who is the founder of Practice Ignition. So today we're going to be talking about the topic of fixed fees. It's a topic that we get a lot of questions about at Practice Ignition, obviously working with and so with the fixed fee playbook, which we recently wrote and co-authored with Xero. And we were able to launch this fixed fee playbook a few weeks ago, and I think there's been several thousand people download it now, which is pretty exciting. And it's going to go into a lot more detail than what we covered today, but the aim of today's session is to cover off at a high level some tips and takeaways for you if you are looking to move to fixed fees within your accounting firm. So as mentioned, please use the Q&A. You've got some fantastic IP that you can tap into with Beck on the webinar today. So please feel free to ask questions while you've got us. And of course, I'm here to answer any questions that arise about Practice Ignition. So Beck, I'll hand it over to you just to briefly say hello for a few seconds to all of the listeners, and then we can get into the content.
Thanks so much, Ethan. I won't spend too much time on this at all, as I've already been introduced twice. I've been an accountant for nearly 20 years and moved to fixed fee quite a few years ago now. I remember all the challenges moving from a traditional time-based billing to fixed fee, and desperately wish that they'd had a little bit more guidance and more help throughout that process. There are some great tools available nowadays to help you out, and this fixed fee playbook has really been written with my journey that I went through in mind and the journey of lots of other people I know who moved from that traditional time billing to fixed fee.
Absolutely. And we're actually going to run a poll now to get an understanding of how you guys are currently billing your clients as well, just so we can better tailor the content today. So Melissa, if you could run that poll. The question is, how are you currently billing your clients? If you're a fully fixed fee firm or you're billing hourly, in arrears, or a combination of both, that should pop up in the bottom right of your screen there. If you could submit your poll answer, that would be fantastic. And then we'll be able to get a gauge of who we're speaking to today and where you guys are at on the journey. To answer that question that has come through, we will post the link to the playbook in the chat function as well. I can do that in a few minutes, and we'll also be able to send that in a follow-up to all of you as well. So if all of you could vote on that poll. I can't see how many of you have voted, but maybe if we leave it up for another minute, Melissa, and then we can finish that one up. Basically, what we're looking to cover today is 4 key points, and these are the 4 things that I hope you'll get some more clarity on after today's session. And if you've got a pen and a notebook, the 4 key dot points that you'll be highlighting, hopefully throughout today's session. So obviously, we're going to cover off on what is fixed fee billing, so we're aligned on exactly what we're talking about. We're going to talk about why time billing is actually fixed fee, or a version of fixed fee in many cases. We're then going to be talking about some of the key questions that we get asked, figuring out what to charge, and go through the steps of categorizing your clients, determining your prices, the importance of payments and how moving to fixed fee can actually have a significant impact on your debtors and accounts receivable if you've put in place an accounting, a software solution to really automate your payments there, and some of the challenges involved both internally and externally with your clients and staff. And so let me just have a look at the poll here. So it looks like the vast majority are billing as a combination of both. 26% of you are, and a small portion, only 4%, are a fully fixed fee firm. So great that you've been able to join today. Hopefully this will give you some key takeaways and help you along if it's something you're looking to get stuck into. So firstly, over to Beck. We're going to talk about what is fixed fee billing. And ultimately, when we're talking about fixed fee billing, we're talking about setting a fixed price for services that you're going to deliver in advance of actually providing the services. But Beck, do you want to talk through some of the ways that you're actually, or the forms of fixed fee billing that you've got, that you've implemented at Business Depot?
Yeah, thanks, Ethan. The thing here with fixed fee billing is that there's quite a few varieties on the way that you can invoice in a fixed fee scenario. You can invoice your clients upfront for the work, on completion. You can have monthly reoccurring fees, or you can have a combination of different ways you're invoicing your client based on the engagement and how they want to work and when the work's being done. The key thing, though, with all of it, it doesn't matter how often you bill your client, so long as there is a very clear engagement that sets that firm fixed price at the beginning for all the services you're going to provide. You can do that on a package basis, or you can do it on a line-by-line basis, so every service has a different fixed fee against it. When we're looking at the different kinds of fixed fee billing, so an upfront scenario it could be partially upfront, it could be partially on completion, but that part would be you taking payment in advance of actually starting work. I like the upfront for either small jobs or riskier clients. The on completion is not a terrible form of fixed fee either. It means that you have to wait to complete the job to be able to invoice your clients. If you're looking at a big project, you might want to look at progress payments throughout that. So that's a little variation on that bill on completion. If a job's going to take you 2 months, you might not want to wait that full 2 months, and maybe there's an interim bill at the end of 1 month. And monthly recurring fees is becoming a really popular method of invoicing clients, not just from the accountant's point of view, but sometimes their clients as well. They like to smooth out that cash flow. They like to know how much their accounting fees for the year are going to cost and pay for that in bits and pieces in that consistent amount every month, as opposed to getting a huge bill at the end of the year when we finish their compliance work. We have more and more clients every year want to move to a monthly recurring fee arrangement. And we here at Business Depot, we use a combination of all of this across our clients because we have great tools in place. We don't need to just pick one and use it. We can use whatever makes us more comfortable and our clients.
Excellent. Thanks, Beck. And certainly, definitely would echo what you said there in terms of, monthly recurring revenue becoming more popular for both accounting and bookkeeping firms as a way of charging clients. And I can totally attest to the hesitation that folk have when thinking about monthly recurring billing. Quite often, we have seen the vast majority of firms who have implemented MRR or monthly fee to their clients, they're actually not getting pushback at all when they're able to clearly communicate the value that they're providing. It gives certainty, as you said. It allows them to more accurately forecast their costs as well. And so I think it's quite important to really consider that is certainly something that's on the up and up. So now we're going to talk about why time billing is often fixed fee. This is something that you wrote about in the playbook, Beck, or a blog post, one of those. I can't exactly remember where you wrote about it. But Beck, do you want to share briefly on how this is actually a version of fixed fee, and that the change between these two models might not be as drastic as some might think?
Yeah, thanks. If we sit down and think about what work in progress is, and that whole WIP ledger that we start to collate when we're doing timesheets for our clients, we get to the end of a job and we have now a dollar value that we have accumulated in work in progress. Now, if we are a very, very firm time billing firm, we will only invoice exactly what that amount is for the WIP. So whether it's higher or lower than it was last year, or whether it's more or less than the client may have expected, is irrelevant. That's our WIP. We will invoice that WIP. Now, I have worked at firms and that doesn't happen. And many of the other accountants I've spoken to over the last 20 years, that doesn't happen. That's where we end up with this situation with WIP write-ons and WIP write-offs. So write-offs will often occur if a job blew out on our end. It was a problem. Maybe we had senior staff working on a job that should have been done by juniors, but we didn't have enough juniors around, so our WIP figure's a little bit wrong. Maybe we had a software failure, or we misunderstood what we were doing on the job. Maybe we overworked something, or maybe we got to the end of the job and accumulated so much WIP on it that we just know the client's not going to pay it because we didn't communicate with them during the job that it was starting to blow out and they're going to have pushback. So in that instance, and a range of other reasons, we'll have a WIP write-off. Now, when we have a WIP write-off, we already know in our minds, taking on that job, how much the client will be willing to pay for, especially if they've been a long-term client. They're going to pay the same amount that they've paid last year and the year before if the work is similar. It might increase or decrease slightly, hopefully only increase slightly, but we know what that figure is. And that's why it's not that whole process of time billing and looking at WIP write-offs, it's not far away from fixed fee. If you're implementing a system of WIP write-offs, you're probably pretty close to it. And if you're also doing WIP write-ups, then you're also very close to that fixed fee scenario, because you know the client would be willing to pay more for a job. And just because you've implemented efficiencies in producing the work doesn't mean that you should be penalised for using great software or great systems. That job is still worth the same amount, and you shouldn't be writing, or you shouldn't be invoicing less just because your WIP balance is less this year.
I think that's a great point. As we start to adopt more technology, and the vast majority of that technology is no longer, you're no longer paying $30,000 or $40,000 for a server in your business. You're paying a monthly recurring fee to access, your software stack, or I assume most of you on the call would be. It makes sense to align your invoicing and your client payments with your costs, which are monthly. So the key point there is when you're actually communicating these fees to the client, I think. Moving here to, I guess, another couple of points. A lot of firms that we see get stuck on the pricing and packaging front when they are actually looking at implementing practice ignition, specifically because they are reviewing their engagement letters and their services and so on. It becomes a real sticking point for many firms, and they don't actually have a menu list of prices or a set baseline of prices. So Beck, maybe if you could quickly share the process that you guys went through when moving to fixed fee, and then potentially share on how you actually went about communicating this price to your clients. I know some firms are so bold as to put their pricing for all their services on their website. Is that something that you guys do? Does it vary on a client-by-client basis? If you could share on that, that would be great.
We're not quite as bold as others. We do not have our prices on our website, but we don't have them on our website because we acknowledge that there are variations and more variations every day to our clients. We have a whole suite of services that we can offer them. So the way that we will bill the clients will be different, and depending on the size and industry and their own technology, there are too many variables for us to confidently put things on the website, and even websites that start with this package is from $100 a month, etc. When a client sees that, they're always expecting they're the $100 a month client, but they might not be. They could be the $1,000 a month client. So for that reason, we're not putting prices on our website at this stage. When looking at moving from that time billing to the fixed fee billing for our clients, the process that we went about was actually looking at what would our average prices have been for different services and what we want our minimum fees to be for our services. And we'll go through that in a little bit more detail later on in this. But we were able to get a lot of that information out just using the accounting software that we have. And I've been through a few different iterations of accounting software as the ledger for the firm over the last 20 years. And most, if not all, the solutions that I have touched over that period of time allowed you to export some sort of detail out with your listing of your services, because most of us are not retyping that paragraph in every invoice. It's a select paragraph. We're grabbing that and we're putting it in. It's quite standardized, so we know we've got that service listing or template. We just need to think through the best way to get it out of that software into something that's a little bit more workable. And depending on what you're using, that might take a little bit more time, but it absolutely should exist. And if it doesn't exist, then just think about the top 10 services you're offering and start there. Everything else you might just pick up as you do your engagements.
Excellent. And I think we're going to go through some specific steps in terms of determining your fees in a few minutes as well, so more on that to come. But the key point here is just having a proper communication strategy in place. But before doing that, obviously spending some time to understand what your menu of services is going to look like. And the thing that follows really closely onto that is reporting. And so quite often when we see firms move to fixed fee, they actually throw the baby out with the bathwater sometimes and throw out all of their internal reporting and timesheets as well. And something that we've talked about in the last chat that we had, Beck, is that timesheets are still so important for firms that are wanting to get accurate reporting on their profitability, on their recoverability, on their efficiency of their staff. And Practice Ignition's run a number of webinars with the Xero partner consulting team. I don't know if any of you are familiar with that team. Naomi McDonald is sort of the guru, XPM guru when it comes to reporting and so on. But we're finding that firms that actually have a proper reporting process in place for tracking time and for reviewing their work are really the exception to the rule. And so we've tried to run several webinars recently on how you can actually optimize your reporting from Practice Ignition through to the ledger, through to the workflow practice management system to actually get some optics on this. But Beck, are you keen to briefly share on the role that timesheets play in your business and how you use that to have conversations with your staff and how often you report or review your work that you've just done for your clients?
Yeah, we actually went through the process of getting rid of timesheets when we moved to fixed fee. So I can very confidently say that it's a bad move. You still absolutely need your timesheets. We didn't use them for a couple of years, and in that period of time, I lost visibility over lots of things that were very important to running this business, particularly as we grew. When we were small and there were only a handful of us, I could touch and understand what was going on across the team. As we grew a little bit bigger, not having timesheets meant I was not as across on how long it was taking my team to do certain jobs and whether or not they were struggling with items, where their education point was at. Because if one of our team members is spending 8 hours doing a job that should take 2 hours, sometimes that is not them just stuffing around. They actually don't know what they're doing properly and need some further education. So all of that visibility went away. It also became really difficult for us to do the engagements for the second year. So we engage our clients every single year. And when we went through a full year of not having any timesheets, doing that engagement for the following year and looking at what our next 12-month fixed fee was going to be for a client became difficult because we had no timesheets to just go back and have a look at where are some areas maybe we were a bit off or we blew out, or were there any indicators that something else was going to happen. And also don't downplay the importance of timesheet on just keeping a record on your interactions with your clients, although most of them are now, we've got a lot of emails and we can look through calendars, but that timesheet, every time a client rings up, we're making a note in our timesheets. So it's a good record of the interactions we have with our clients. And if we put in good descriptions, it's also a good record of the things that you discussed. And that can be phenomenally important moving forward, and also checking work that's happened before.
Absolutely. And not to keep hammering on about Xero, but for those of you who did recently listen to their Xero On Air announcements, I thought it was quite exciting that they're actually integrating a lot more of their practice tools now to enable you to easily track time. So they're syncing your time across like Xero Tax and XPM and Xero HQ. And so you're no longer needing to jump into your practice manager to constantly, track your time. They're trying to make that easier. And so I think it's so important that we can streamline that. And for those of you who are using other systems, we actually ran a webinar a few months ago with a fellow who specializes in Power BI. And he was actually able to extract all that information out from the practice manager to analyze timesheets and gamify it as well, to be able to actually create an internal leaderboard with the accountants in the firm as to who's done their timesheets on time, and he's scheduled out these weekly emails with prizes and that sort of stuff. So that was quite cool. Not that we have to all go to that extent, but there that's making it easier. Things that and a lot of firms asking us questions about, and so these are the questions that and the main areas that they covered in the playbook and more. For those of you who haven't seen, I've dropped the link to the playbook in the chat function of this WebEx as well, so feel free to access that there. Figuring out what to charge, when and how to take payments, how to actually start to get the ball rolling and identify a test group, and then managing the change internally and externally as well. So we're going to talk about working out what to charge, and we touched on this earlier. Something's gone a little bit awry with my formatting on that deck, so hopefully you can look past the badly aligned ticks and get the heart of the content that we're trying to get across to you. But Beck, do you want to talk through the steps that you went through to understand what to actually charge for your services and how to set up those?
Yeah, so the first thing we did, as I mentioned before, was we looked at what our services were. We, at the time that we went to fixed fee when we were at Aptus, we were using Xero Blue as our general ledger for the business, and all of the paragraphs were set up in there as well for what services we were offering our clients. XPM has that set up as well in it, so we exported that out and we got our listing out, and we were able to have a look at that and have a look at what the average prices were that we were charging across the board for those things. Now, when we have a look at what that average was, the reason why we looked at the averages was to make sure that we were comfortable with what we were recovering for a particular job. Were we comfortable where our average fee was sitting for SPASs or annual accounts for companies or whatever it is as we went through? Now, looking at that average price, it was important to figure out what our average was so that then we could have a look at what our minimum fees would be. Now, the reason why your minimum fees are important is because you need to understand what a job at a bare minimum is worthwhile for you to do, and when you don't want to take on work, or just understand if everything is perfect in a job and the client is small and there aren't a lot of variables, where do we start? And then that starts to then have a look at your tiered pricing moving on from that as a business gets a little bit bigger and more complicated. And if we move to the next slide, I want to go through a client categorization tool that you should be using. Now, this is just an example of one, but it's something that you should implement in your own business if you want to have a look at categorizing your fees. Because once you've got that listing out of all the work that you've got, that's great. Now we need to figure out how much we're going to charge our clients. The biggest variables with the way that we charge our clients is around how large they are and how many different activities they have going on in their account. Now, I put together this example categorization tool on some of the indicators that we see make our clients a little bit more complicated. So this is just an example. Ours has quite a few more lines below that employees. One of the factors that we also look at as well is how we rate their internal accounting processes and whether or not they have an internal accounting team that are doing a good job. Now, if we have a look at this, you know, we've got a small client, medium client, a large client. So a small client might only have one bank account, a medium client probably has more than 3, a large client may have more than 5, but they may also have just one. The amount of finance leases that a client has tends to indicate their size, as well as definitely the amount of employees. Now, I'm not suggesting that when a client exceeds one of these items, they automatically move up into being a larger client. But if they exceed, say, maybe 2 categories or 3 categories, you should be looking at whether or not they're now no longer a small client, but maybe they're a medium client. Again, it's all variable, but this gives you a good guidance for figuring out where your clients sit in that. And the reason why you need to understand that is because your minimum fee for your clients, for your services, will be different depending on how large those clients are. So if we look now at this example pricing matrix, we've put together an example here of what you might charge as a minimum fee for, say, a BAS or annual accounts for a small, medium or large client. Now, you will determine this by having a look at what your current minimum fees and your current average fees are so that you can feel comfortable. Your average fee would probably be around about your medium client, and your smaller client will be on that lower end that you're currently charging. Our large clients are probably a little bit more variable. We have a base amount there, but often end up they're the clients who the price will never be the minimum fee. It's always a little bit more. They're always a little bit more complicated. There are always more variables there. But this is a suggestion around looking at your pricing matrix and how to put this together and to go through that same activity in your firm. So exporting out your services, understanding your current average fees and what you're happy for your minimum fees to be, categorizing your clients by putting together a matrix or a tool to actually categorize them. And then once you've got those tools ready, you can now have a look at your client, figure out whether or not they're small, medium or large, and then figure out how much you're going to charge based on this pricing matrix. When you have those tools available, what it means is that other people in your business, your administration team, or even your junior staff can have the first stab at figuring out pricing for your clients because you've given them the tools and the framework. It means that you as a partner don't need to do all of this.
Excellent. And then the great thing we've talked about before is that I actually now have engagement as well, because they are confident on the price and you have a process in place for, adjusting the fees and taking the payments and so on. It's a really streamlined process and it doesn't all need to funnel back through yourself, which I think is great, which leads perfectly on. It's almost like we planned this back to our next point of how and when to take payment. And so after moving to fixed fee, what we find to be the benefits of that for the several thousand firms that we have worked with in this is that they're able to then take payments up front, or at least a portion of their payments up front. So like we talked about at the start of the webinar, there's a combination of ways that you can bill your clients. But the powerful thing about fixed fees is you can capture a portion of those payments up front, or at least get agreement to those payment terms up front. And if you're using software that assists you in that, you can actually collect those payment details in advance of doing the work, which has a pretty significant impact on your debtors and your accounts receivable. And so for that process for yourself, Beck, are you ever engaging or doing work for clients that where you haven't got them agree to fees or taken their payment details? Or is that something you always do before you start actually doing the work?
There are some rare circumstances where we don't take the payment details. We use fixed fee on something like 99.99% of our clients. There is a random project that will pop up maybe once every 2 years that we honestly don't know what's going to be involved as we dig in. That, instead of being a fixed fee, will just be a very open communication process where we will stop on a weekly or monthly basis, say this is where we think we're at right now, and raise an invoice, and don't move on until that invoice has been paid, and try to just keep the client up to date as much as possible, all about open communication. And then we have some charities that we work with and a couple of other things where taking payment details is just not something their constitution will allow. Aside from that, all of our other clients need to put their payment details in. If they've already agreed to the fee and they've agreed to our terms and conditions and they understand when we're supposed to be getting paid, there is really no logical reason why they can't give us their payment details and put us back into control around when we're getting paid for work It just means that everything's fine. When we bill on completion, we raise the invoice on that day, send it to the client, and then they have the payment term. So our terms are 7 days, and they have those 7 days to raise any issue that they have with the invoice, which pretty much never happens anyway because we don't invoice until we've done the work if it's a bill on completion. So there should be no reason why our clients push back on that. If they do push back on this, we don't take them on. It's as simple as that. If a client doesn't want to give you their payment details, they probably weren't going to pay you in the first place or weren't going to pay you in terms.
Absolutely, and I think that's a great litmus test at the start of the relationship as well to understand whether they're going to be paying you on time for the duration, which is so important. One thing I wanted to highlight here is that and we'll talk a little bit more about this later, but we have been working with CPA to actually enable members to be able to use Practice Ignition, and part of that process is actually enabling automatic collections and reconciliations with your payments on your proposals. And so one thing that we've actually just recently launched, if you're interested, jump on our website and blog to read about it. And you can actually start to have full customization over your billing schedule in your proposal. So you could have a portion of your fees that are billed as a fixed amount, a portion that are billed on a variable amount. So for example, you could have a monthly fee. Sorry, I think my headphones might just be dying. So apologies if my internet does cut out. But you could have a portion that is fixed fee each month, and then you could have potentially some rescue work or project work that's billed on an hourly basis within the one proposal, and you could still get your clients to agree to those payment terms up front and automatically manage the collections. And Beck, I'll ask you to share on this in a second, but we've seen the vast majority of firms who implement a better payment system reduce their debtors, sometimes by up to $200,000 or $300,000, eliminate bad payers, and provide obviously better control over cash flow for both your clients and yourself. What do debtors look like for Business Depot, Beck?
For Business Depot, since we implemented this system, our debtor days are now completely in line with our terms, which is great. You know, there are times when debtor days have blown out 30, 60, 90 days. Even more now, we're getting our debtor days are 7, which is what our terms are. If not less, because we have some clients who pay us up front. We have next to no bad debtors. A couple popped up in 2020 just because of the environment that we're in, and maybe their payment details failed, but they all caught up as soon as possible because we have a great relationship with them. And, you know, it's such a relief and great feeling to know that we're going to get paid for all the work that we do, and it allows me to really have a close idea of what my cash flow for the coming 12 months is going to look like, and have some great certainty around resource planning for my team and knowing when and how I can spend what money.
Hopefully that system and the benefits that come along with fixed fee. So now talking about actually getting the ball rolling, again, a really common question that we sounds great in theory, but how do we actually start with our clients? How do we identify our clients that are going to be a good fit for fixed fee? How do we bring it up? At what point in the year do we bring it up? How do we communicate it? How do we deliver? What does this process look like for you, Beck, if you're keen to chat through some of the points on this slide?
So when we first moved to it, we tested out everything with not our favourite clients, well, they are our favourite clients, but our clients that we work with really well, that we've worked with for a long time, that we have a very good relationship with. We all have those couple of clients that are more like friends than actual clients. Whether or not that's appropriate, it's a whole other conversation. But they, you know, if you're honest with them, we're testing this new system. This is what it looks like. Send them the links to the new engagement. They click through and be like, oh, I'm not so sure about this. You haven't explained this properly. I don't know if I would be comfortable putting my details in for this reason, and go through that process. So that testing process was really, really important for us. Communication was really important as well throughout this, and just letting people know well in advance when we were going to send something out. We also, new clients is also a great way to test out the process, because the new clients are not familiar with any old process. So they don't know any other way to work with you. So they are really great people to introduce to it. And don't be afraid with anything that you do around fixed fee or new technology or anything that's going on in the business to change it again. If it doesn't work, if it's not getting the right impact, then just change your process, resend, test again, and get moving on. It doesn't need to be perfect the first time you do it. You just need to really start.
Absolutely. And I like that you tie your reviews, your engagements of reviews and the pricing reviews and so on to the interim reviews when you're performing those for your clients as well, to make sure that you're closely delivering value and work when you're talking about price as well. So I think that's a great takeaway point. In terms of now managing the change, we recently did a webinar with one of our customers actually by the name of Eric Cyrillus, a fantastic chap from down in Melbourne. And we talked a lot about change management in that webinar, and he was quite big on the DISC profile. And for those of you who studied the DISC profile, if you did a management elective in university, you'd be able to know that, there's different personality types and people tend to respond to things in different ways. And so one thing that I've been looking at personally is just how we communicate information to different stakeholders in our business. And so it's the same with your clients. And his biggest point was, when he was moving not only to fixed fees, but also he did a complete overhaul of his internal practice systems to cloud-based tools. He was quite big on identifying how people communicate and then presenting the information in that right way. And most accountants are quite conscientious and detail-oriented, and so you're going to need to present this in a way that's thorough for both your team and your clients to make sure that they're brought on board with the journey. Quite often we see firms who are, and this is both in Practice Ignition and my prior roles in technology businesses, the partner sees the technology solution, the software, and loves it. Gets the business case, sees how it's going to deliver them X dollars in return on investment, and then passes it off, hospital passes, if you like, over to the practice manager, who has absolutely no context as to why this decision is being made. The software has no impact on the day-to-day workflow of the partner. It's all going to be reliant on the practice manager or the managers that are using the tech. And that's always when it falls over, from my experience, and probably the same from what you've seen, Beck, as well, is when there's no proper implementation plan set in place, there's no internal champion identified. It's a real challenge to get your team to actually use new technology, because it is hard to learn new software and it takes time out of your day, and we know that we're all super busy anyway. So talking through now some of the internal challenges that you guys faced, and particularly looking at this reporting element, and we've already talked a little bit about the role of timesheets and how they play into getting visibility over this reporting. What does that look like at Business Depot at the moment? And you mentioned, you initially threw out timesheets when you went to fixed fees. How were you able to, obviously you've come back from that now and you've done a full 180, but what does that process look like? Could you share some of the tools that you're using to actually get that visibility?
Yeah, so the misalignment between timing of invoices and the timing of the work happens quite often when we move a client from not just fixed fee, but all the way to that monthly reoccurring revenue stream. So when the client's paying you on that monthly basis, if you start a monthly reoccurring engagement with your client, say in July, I'll be really quite specific. So say we've started it in July 2020, but we're going to do their 2020 annual accounts in, say, August, September, October. By the time they get to that period of time when we've done the bulk amount of work for our clients, then there's no way that monthly fixed fee has probably paid for that big chunk of work. So we end up in this situation where post-October, they're effectively paying us off over a period of time when you're having a look at that. So the first year and we ended up with that when we jumped straight into monthly reoccurring. We had a bit of a misalignment there. So what we do now, if a client wants to move to monthly reoccurring fees in the first year, if I move a client to monthly reoccurring on July 2020, they are paying for the 2021 financial year. So for everything that they will pay from July to June will actually go towards all the BASs that we do, payroll tax, anything else we've got to do during that year, any monthly reporting will be paid. It will also be paying for the 2021 financial accounts, which will not be done until, say, August 2021. Then when we do the 2020 financial accounts, that would be the last time that we bill them on completion. This way we're not left at any risk if a client leaves or decides not to pay us or enters into any sort of financial trouble in that period post doing the accounts. We're covered and they're covered, and we're always paid in advance as well as on a monthly basis. It's just a great form of protection. Another thing that you should be doing when you're looking at packaging services under that basis is making sure, even though you're packaging, still understand what each individual service costs in case the client decides that they want an additional service to go into that package, or they don't want something in there. So you can swiftly adjust your price if necessary. Also becomes really important if you're packaging in something like, say, a Xero or an MYOB subscription, because they like to change their pricing up on us and we need to be able to quickly adjust to that. The other challenges that we had, one of them, around that timesheets, I absolutely lost touch of how long jobs were taking my team to do, and particularly with the juniors, just what challenges that they were facing in their jobs and where they were up to with their career progression or understanding of work. Putting timesheets back into place was so important. We also lost some of that clarity around how much time we were actually spending on our clients and the work that we were doing that was outside of scope. You can pick up on that in a timesheet when a team member has done something that you're not actually engaged for. And when you move to fixed fee, if you're not engaged and the team are reliant on that fixed fee, so they're not like raising their invoices, particularly if it's a monthly, you've got some scope leakage there. When we brought timesheets back in and started to have a look through how much of that we had lost, and then also made sure that the team had access to the engagements as well, because we use Practice Ignition, our team can find the engagements within a minute. So we have a whole set of new processes now that fixes that around managing our scope, that our team know that they can quickly update an engagement on the fly with the client. If they ring up, they find it, check the service whether or not we're currently engaged. If we're not, they can add the service, add the fee, send it to the client, get sign off. So we're always getting paid for the work that we do. The year that we implemented that, our revenue went up nearly 20% just from billing everything that we were supposed to be doing without actually grabbing that. And that was 20% from just the existing clients.
That's amazing. And just for billing for the work that you're going to do anyway. That's fantastic. So now talking about some of the external challenges, just conscious of time here because we will all want to go to lunch at some point. What was the response like from your clients, Beth? Did you have any clients that gave you any pushback? Because again, it's a really common question that we get is my clients don't want to pay me this way. We've already talked about not knowing what to charge, so we can probably skip over that one. It's too hard to make changes if I get it wrong. If you have a system in place, it is easy to do that. I understand if you don't have a system in place, it is difficult. But specifically on the client expectation piece, have you seen that change over the last, say, 5 years in terms of how they're expecting to engage with you as their advisor?
Yeah, even brand new clients want to know what they're going to be paying for our services up front. And it's not just the tire kickers who are coming along who want to compare us to the guy down the road. They want to know what our services are going to cost. And they might be willing to pay whatever it is, but it's just a desire of clarity from our clients. They're all becoming more cost conscious. This is just going to be a trend that continues, particularly after the year that we've just had. So being able to give them that clarity and transparency is incredibly important. The only clients that we had who didn't like it are now no longer our clients because we were just misaligned in the way that we worked with each other. And there wasn't a lot. It wasn't even 1%. It might have been 2 clients who really weren't on board with knowing in advance how much we were going to charge. Not knowing what to charge. If you get it wrong and your terms and conditions are good in your engagement and stay on top of your timesheets and monitoring that job, just send the client a new engagement, give them a heads up. It should be in your engagement. It's in all the templated engagements that there is that ability to change the fee if something unknown comes to light.
Absolutely. And we almost went the whole webinar without referencing the year that 2020 has been, but I think absolutely people want to know what their costs and expenses are going to be to be able to accurately forecast what's going to happen in their business. So
and you are one of their costs. So moving on now, we talked about communication, how important it is to understand the personalities of your team and clients and present the changes accordingly. For those of you who aren't using a really basic mailing tool like MailChimp, it's actually free. My parents run a business, a really small business, and I set them up on MailChimp a few months ago, and it's been great. So granted, every time they want to send an email, I have to go and draft it and so on. But it's a really simple tool to be able to send out a newsletter or an announcement or a note that you're going to be adjusting the way that you engage with them moving forward. Where, again, a common point of failure that we see is sending out something like a practice ignition proposal with no prior communication, because the client is not used to dealing with you in this way. They're potentially not used to paying you online if you're not using a system already. And so the firms that get it right and really, as Beck said, minimise the churn or the negative responses from clients, communicate early and often around any technology changes that are going to occur. So now we've covered off on a lot of points over the last 45 minutes. I just want to chat through some of the key benefits that we've discussed here. And Beck, feel free to chime in if you'd like. But the main things that really stood out to me when we were talking about this content was clear, defined scope. There's no undercharging, and the more come under practice ignition, almost always over-servicing and undercharging and underestimating the value of these services to their clients. And so quite often we see firms, when they're moving to fixed fee or implementing a new engagement system, it actually prompts them to increase their prices as well, because the clients, 9 times out of 10 actually vastly value these services much more than you think they're worth. And so that's probably one key takeaway that I wanted to get across. And that when you are moving to fixed fee, you do have control over the scope, and you're teaching your clients to expect a new engagement if they're asking you to do more work for them. The debtors piece is huge. So like I mentioned, a reduction of, sometimes several $100,000 worth of debtors and getting paid always in your terms. And I think it's a great achievement, Beck, that you mentioned there, that your debtors are within terms at the moment. If it's any time where clients aren't going to be paying you on time, it's probably at the moment. As I said, their clients expect a new proposal for new work. And the happier and more engaged team, this is something you've shared on as well, Beck, and maybe you can just highlight what I mean by this. But you're actually empowering your team now to own the client relationships, and as you said earlier, adjust the scope, the pricing, be confident in the delivery of that service. Have you found that that's resulted in more engaged team members that feel like they've got more ownership?
It does, and it also gives the team members all the way down that granular level almost more control over meeting their own personal KPIs. When we set KPIs for them around recoverability and fees, but we take away their ability to actually manage that process, it's difficult for them to meet it. There's only so many hours in the day. There's only, a certain level of work that they can actually do. But when they're actually having a look at the time that a job's going to take and assessing some of those fees, that gives them back a little bit more control over meeting their own KPIs. By all means, you can still have review processes in place, particularly new team members or, team members who might not be completely senior, still have somebody check those fees to make sure that they're appropriate. But I think that that's been a fantastic tool to increase the team's engagement and has made them so much more efficient.
Awesome. That's fantastic. I also hear it's so hard to get accountants to work for you. It's like making them engaged is so important. So I wanted to briefly talk about the work that we've been doing with CPA recently and actually highlight how Practice Ignition can play a part in your move to fixed fee. And there's a couple of points here. For those of you who aren't familiar, and as I said, there's a lot of familiar names on the webinar today, so you may be familiar. But essentially what we do is automatically generate a bespoke engagement letter based on the scope of works that you're delivering in that proposal. So when you're sitting down with a client or you're on a Zoom meeting or whatever, you're making notes, you're understanding their requirements, you're putting the package together. When you put that together in PI, it automatically generates the engagement terms that Beck has been referring to. And if you think about your current process, whether it's editing a Word document or a PDF, you are far less likely to edit those terms on a case-by-case basis because you've just got a template sitting there in Word. It takes too long frankly, to scan through and create a custom Word engagement letter for every client. The vast majority of accountants don't engage their clients properly, and we just ran a webinar recently with the Tax Practitioners Board, actually, with CPA, talking about engagement, this very topic, and they expect, at the minimum, annual reviews and annual engagement letters out to your clients. So I think you can watch the recording somewhere in CPA in the archives if you're interested in that. The beauty of this is electronically delivered proposals and engagements, so your clients can actually engage with you without needing to physically come into the office. You can deliver a really slick, professional e-commerce style checkout experience almost for your clients in professional services, which I think is really exciting. The beauty of payments, and for those of you who are using cloud-based tools like Xero, we not only collect the payments, but we automate the accounts receivable as well by raising the invoices, reconciling them, and then also deploying the jobs and work off the back of that proposal into your practice management system. And so if you think about it, it's really a full circle solution, and it means that there's no work appearing in your practice management tool before you've got a signed proposal. The first thing that the client does, the kickstarter of the relationship, if you like, is they read the proposal, they agree to your service terms, they put in their payment details if you've selected that as an option, they sign up to it. So this happened recently with my personal tax return with my accountant. He sent me a proposal about a month before doing the work for $250 for doing my tax return. I read through the scope, all good, put in my BSP account number, digitally signed it, forgot about it, got my refund, and then had the $250 deducted from my account the week after. And so I was just thinking about these sort of efficiencies, and when you multiply them across a larger client base, it can really be a time saver. Specifically, what we've done with CPA is actually integrated the CPA engagement letter template within Practice Ignition. And so when you sign up for a trial of Practice Ignition, and I'll share a link with you shortly, you actually get access to the CPA engagement letter within the platform, which means you've got a pre-approved template ready to go, which automatically has the placeholders built into it. All you need to do is just add the services to your proposal, and they get sucked in along with the price and the terms, etc., into the CPA engagement letter template. And I'll show you actually what that looks like in product in a minute, because I think it's important to show you guys what things look like rather than just slides. As you're going through this process, you actually have access to our whole team who work with hundreds of accounting firms in doing these things, in implementing technology and in changing the way they bill their clients. We've also got access to Beth, although not 5 days a week. I can see, hopefully she's not shaking in a boot there. I won't be giving out Beck's mobile number for any questions, but there are a series of meetings that occur with Practice Ignition where we actually assist you in rolling out these changes in your firm and learning from the experience of our other customers that have done the same. And so if you are interested in getting started, jump into this landing page that you can see the link for on screen, landing.practiceignition.com/CPA Australia. I'm actually just going to share my screen with you to show you what this looks like. Bear with me here. I'm usually a Zoom user, not a WebEx user. I should be able to share. Beck, can you give me a thumbs up if you can see that? Sweet. So if you can see here, jump onto this landing page, as I mentioned, and I'll copy and paste this into the chat. There's a couple of videos, pre-recorded webinars, which you can watch, and some high-level information about how the partnership works and how to get started and what the benefits are for CPA members. But what I wanted to show you was an actual example of a Practice Ignition proposal. So say if you're my client, you're actually receiving something that looks like this after the initial scoping meeting, which has got a video. It could be a Slick video, which I've got here. It could be a Loom video where you've recorded your face to camera to guide them through. There's a personal message. You can see on the left, there's a brochure of accounting services here, which we actually create for you based on your website and how you would like that. That's a free service that we have for you. But on the right-hand side, you can see the scope of works that are clearly outlined here, exactly what they're paying for, exactly when they're paying for it. So you can see this is an example of a combination proposal where some of it's billed up front, some of it's billed recurring, and the tax return here is billed on completion. They can then actually put their payment details in the proposal, so that their bank account or their credit card details, they can pop that in the proposal itself. And you can actually require this from your clients as well. So for new clients that are coming on board, you can actually require that they put in these details before they can even sign with you. And then here you actually get access to the CPA template. template. And so this has pre-populated with the terms, the scope of works you can see there, all outlined. And I haven't touched this. I've literally selected this CPA template from the drop-down, and it's spelled out all of our fees, third-party involvement, ownership of documents, out-of-scope work, etc. So a huge time saver there for those of you who are finding that to be a bottleneck. The clients then digitally sign it, which is legally binding, obviously. Click the accept button, and then the magic happens there on the invoicing and workflow front. So I hope that makes sense for all of you as to how that works. I'm going to post that link to the CPA landing page in the chat now. Otherwise, we do have a little bit of time for questions. I haven't seen any questions come through. Melissa, if I've missed anything, please let me know.
Ethan, there is a question. There is one question that has come through. So we've got a member who's using the MYOB AE for client work practice management. And he's just asking how practice ignition systemization would work in those scenarios and maybe around the integration with MYOB. Yeah,
that's a really good question. Kind of off the record, but also on the record, we are speaking with MYOB at the moment, so stay tuned. We don't have a direct integration at this stage, but as they're migrating a lot of their systems over to being cloud-based, if any of you are aware, moving Account Write Live over to, basically building in the back end of Essentials, so it's a comparable product. We're looking at integrating with them as well. So can't provide timeframes, but it will be relatively soon. That said, we do have a lot of customers, existing customers who use MYOB and Practice Ignition at the same time. It just means that you don't get the automated invoicing. You can still use the payments, you can still use the proposals and the engagement letters, which is great. So if there haven't been any other questions, I will drop the link to this landing page in the chat. I'm sure that Melissa will send this out in the follow-up. I just wanted to say a huge thanks both to all of you who have joined us today. I really appreciate you taking time out of your busy schedule. I know you're all flat out with JobKeeper 2 and the rest of it. And also thanks again to Beck. I know you put in a lot of preparation to the playbook specifically, and also a lot of hours in doing webinars with us again. So thanks again for contributing to the broader accounting community.
Not a problem. Thanks, everybody.
Back over to Ketty, I think.
Thanks, Ethan, and thanks, Rebecca. Look, it really has been a really comprehensive and detailed webinar, and I think the fact that lack of questions is probably reflective of the amount of content and detail insights you've really provided today. So thank you so much, Beck, for sharing that insight, and for Ethan for going through and pulling that information together. Really appreciate members' feedback, and I have had a couple of little private posts to say it's been a great webinar. So many thanks, and thank you to all the members for joining us today. And with that, I'm going to hand back to Melissa.
Thanks, Ketty. Thanks again to Ethan and Rebecca, and thank you for your participation today. In the next 3 working days, you'll receive an evaluation survey accompanied by a recording of this webinar. We really appreciate your feedback, as it is extremely valuable to CPA Australia to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.